Welcome back to the Saskatchewan Real Estate Podcast. I'm your host, Ronald Caroni, and today we are diving into the Bank of Canada's latest interest rate cut and what it means for you.
This is the Saskatchewan Real Estate Podcast.
Here's what we are going to cover: why the Bank of Canada decided to cut rates, how this affects your mortgage payment, whether you're on a fixed or variable rate, what's next, will we see more rate cuts in 2025, and the big question: should you lock in to your fixed rate or stay variable? If you're a homeowner, a first-time home buyer, or just someone keeping an eye on the economy, this episode is packed with insights you don't want to miss. Before we get started, don't forget to like, follow, and subscribe to the Saskatchewan Real Estate Podcast so you never miss an update on the housing market and mortgage trends. All right, let's get into it. Why did the Bank of Canada cut rates? Let's start off with the big question. Why is the Bank of Canada making this move? Number one, economic uncertainty. While Canada's economy isn't in a recession, it's definitely facing headwinds. GDP growth has slowed, business investment is cautious, and consumer confidence isn't as strong as last year. Inflation cooling off. Inflation has been the Bank of Canada's primary concern for the last 2 years, but recent data suggests it's coming down closer to their 2% target. This gives them some breathing room to lower rates without fearing a spike in prices. Global pressures, international trade tensions, potential US tariffs, and slower economic growth in key markets like China and Europe have influenced this decision. This move follows a pattern we've seen before. When the economy slows, the Bank of Canada steps in to encourage borrowing and investment. But is this just the beginning of multiple rate cuts, or will they pause here? More on that prediction coming up in the episode. Before we get to that, what does this mean for current mortgage rate holders? Let's talk about how this affects homeowners, whether you already have a mortgage or are thinking about buying. For variable rate mortgage holders, your mortgage is tied to a bank's prime rate, which moves generally with the Bank of Canada's policy interest rates. With this 25 basis point cut, your monthly mortgage payment will decrease. For every $100,000 borrowed, your payment could drop by around $13 to $15 per month. If you have a $300,000 mortgage, that's around $39 to $45 in monthly savings. If you have a fixed rate mortgage, your rate doesn't change right now, but this could be a good sign if your renewal is coming up in the next year or two. If the trend continues, you might secure a lower rate than what was available, let's say last year. If you have a HELOC or a home equity line of credit, these are tied also to a bank's prime rate and influenced by the Bank of Canada's policy rate. So interest costs on any borrowed funds will go down slightly. It's not a massive change overnight, but for those with variable rate mortgages and home equity line of credit, every little bit helps. And if more cuts come, your payments could drop even further. Who doesn't love predictions? Will there be more rate cuts in 2025? Let's look ahead. Is this just the first cut of 2025, or could we see more? Or is this the end? No more rate cuts. According to economists, Desjardins expects the policy rate to drop to 2.25% by the end of 2025, meaning multiple 25 basis point cuts throughout the year. BMO predicts a more gradual approach, with cuts in March and June, potentially later in the year, bringing the rate closer to 2.5%. But what will drive future rate cuts? Economic growth. If the economy continues slowing, the bank will likely cut again to stimulate borrowing and investment. Inflation trends. If inflation stays near or below 2%, they'll have room to lower rates. Global factor. A major economic slowdown or US tariffs on Canadian goods could also push the bank to cut further. What has the Bank of Canada said? They've taken a wait and see approach, meaning they're not committing to more cuts just yet. Their latest statement says they will be evaluating the need for further reductions, one decision at a time. So while more rate cuts could be coming, it will depend on the data. If inflation rises again or the economy picks up, they may pause. But if things stay soft, expect at least a few more rate reductions. Should you lock in or stay variable? A big question I get asked is, should I lock into a fixed rate now or stick with a variable mortgage? The truth is, it's always very personal to each borrower. If you want predictability, a fixed rate might be your best option. It locks in your rate and monthly payment for, let's say, the next 1 to 5 years, protecting you from any surprises. If you think rates will keep dropping, a variable rate might be the better play. If we get multiple cuts in 2025, you could save money over the long run. If you plan to move or refinance soon, a variable rate mortgage may offer more flexibility since breaking a fixed rate can come with a heftier penalty than a variable rate's 3 months interest penalty. There's no one-size-fits-all answer, but working with a mortgage professional can help you decide based on your personal financial situation. So wrapping this all up, what is the bottom line? The Bank of Canada's latest rate cut is a sign that we are in a potential new phase of the interest rate cycle. If you have a variable rate mortgage, you're seeing immediate savings. If you're renewing in the next 12 to 24 months, you might lock into a potential lower rate. And if you're looking to buy a home, borrowing just got a little cheaper if you are planning on taking the variable. But will rates keep falling? That's the big question. The Bank of Canada isn't giving any clear signs, but most experts expect at least a few more rate cuts this year. If you found this episode helpful, don't forget to subscribe to the Saskatchewan Real Estate Podcast. Share this with someone who might benefit. And as always, if you have a mortgage question, reach out. I'd love to help you. My contact details are in the description of this video. And new to 2025, not only am I licensed as a mortgage broker in Saskatchewan, but also in Alberta as well, meaning I can service you if you have a purchase, renewal, refinance coming up in Alberta as well as Saskatchewan. Looking forward to a super exciting season of the podcast. Lots of value going to be provided. Looking forward to connecting in 2025.